The question is one that has echoed in bank lobbies and online forums for years. Have you ever walked into a major US bank, your Iraqi Dinar or as Vietnamese Dong in hand, only to be met with those familiar, confused looks or a polite but firm refusal? If that sounds like your experience, you are far from alone. In fact, a dedicated, albeit smaller, segment of the American population is currently grappling with this exact challenge, all asking the same fundamental question: past when will US banks begin exchanging these particular currencies for dollars? It's a query surrounded by an unusual amount of online speculation, hype, and often unfounded rumors, creating a confusing landscape for legitimate currency holders. Today, we're making a concerted effort to bypass all that noise and get down to the essential, fact-based truth about the actual, verifiable situation regarding these currencies in the year 2025. This is not about engaging in speculation or discussing the often referenced RV or revaluation theories. Our objective was singular and direct: to go straight to the definitive source of information, the major financial institutions themselves. What we uncovered after initiating dozens of direct communication calls with banks across the United States is something that may very well surprise you, could potentially be unsettling, and most importantly, is designed to provide you with absolute clarity concerning the practical future of any dinar or dong you currently hold. It's crucial to understand why this detailed analysis is necessary. The information you gather here could serve as a valuable protection, potentially saving you a significant amount of time, unnecessary expense, and perhaps even shielding you from making a costly mistake based on misinformation. For the past month, we undertook what can only be described as one of the most exhaustive and specific investigations ever conducted on this precise banking topic within the U.S. The scope of our inquiry was broad and intentional, designed to capture a true cross-section of the nation's financial services industry, ensuring our findings were robust and representative. Our investigation involved reaching out to and engaging with over 30 distinct financial institutions spanning the entire United States. This rigorous list included financial behemoths, the kind of corporate giants that dominate the landscape, such as a Bank of America, as Wells Fargo, and a Chase Bank. Crucially, it also extended to include numerous smaller, more geographically focused regional banks and various local credit unions. Our goal was not to collect anecdotes, but to gather genuine, official responses, aiming to bypass the pervasive world of online rumors and obtain concrete answers that could be verified through banking policy. The results we meticulously compiled were not ambiguous. In fact, they were remarkably crystal clear and spoke volumes about the current status of these currencies within the mainstream banking system. While it was apparent that a few of the larger institutions were at least informed about the common public inquiry regarding the dinar and dong, a striking number of others did not even possess a formally defined or written policy addressing either the Iraqi or the Vietnamese currency. This lack of standardized procedure was a significant finding, indicating a clear gap in mainstream operational focus. To put a number on our findings, out of the 30 different institutions we thoroughly investigated, a mere 3 possessed any kind of official, internal errors written policies detailing procedures for handling these specific foreign currencies. For the remaining 27 banks and credit unions, the situation was a complete binary. Either they explicitly stated that they did not process transactions for these currencies at all, or, perhaps more tellingly, their front-line staff members and foreign exchange representatives were genuinely unaware of any formal exchange procedure that could be initiated by a customer. This fact alone delivers a crucial and undeniable message. The stark reality revealed by this investigation is that the Iraqi Dinar and the Vietnamese Dong are emphatically not integrated into the standard, mainstream foreign exchange systems utilized by U.S. banks in 2025. They exist operationally outside the regular channels that handle widely traded global currencies. To understand this in greater detail, we initiated contact with Bank of America, an entity that ranks as one of the largest and most influential financial institutions operating within the country, serving as a bellwether for the wider industry's stance on foreign exchange. When we reached out to Bank of America's dedicated foreign exchange department, The response we received was delivered with a tone that was both polite and unwavering in its certainty. The representative clearly explained their standing policy. This Bank of America does not currently offer services to exchange Iraqi Dinar or Vietnamese Dong for US dollars. This established policy is not a matter of local discretion, but a corporate mandate that governs all branches and transactions involving foreign currency across their national footprint, confirming the non-mainstream status of these currencies. We then posed the logical follow-up question, asking directly if this specific policy could foreseeably change in the imminent future. The response from the Bank of America representative was equally direct and transparent. They confirmed that their institution reviews all of its currency offerings on a quarterly basis, a standard procedure for large banks. However, they were equally clear in stating that there were no current or planned internal discussions or initiatives to integrate either the Iraqi Dinar or the Vietnamese Dong onto their list of exchangeable currencies. An intriguing detail that the Bank of America representative shared was a strong indicator of public interest, even in the absence of an exchange service. They mentioned that their foreign exchange department continues to receive a consistent, noticeable volume of calls, approximately 10 to 15 calls every single week, from individuals specifically inquiring about the exchange status of these two particular currencies. This fact confirms that public curiosity and interest in the potential for exchanging the dinar and dong remains strong and persistent, even though the official banking policy has held firm and unchanged for several years. Moving on, our investigation targeted Wells Fargo's, another major player in the U.S. financial sector, whose response ultimately provided us with the most comprehensive and detailed insight into the procedural mechanisms that guide how large banks formulate and implement these crucial foreign exchange decisions. Understanding their internal rationale helps to demystify why certain currencies are accepted and others are explicitly rejected for retail exchange services across the industry. 2QA representative working within Wells Fargo's international division confirmed a significant historical detail. Wells Fargo formally discontinued the retail exchange of the Iraqi dinar back in 2019. When pressed for the underlying reason for this policy reversal, the explanation centered entirely on tangible, practical operational challenges. The bank determined that managing these specific, less traded currencies was neither operationally practical nor sufficiently profitable for their retail banking operations, primarily due to factors like extremely low demand and the complexity of adhering to varied international regulations. Regarding the other currency in question, the Vietnamese Dong, the Wells Fargo policy was equally restrictive, though different in scope. The representative explicitly stated that the bank securities has never offered the Vietnamese Dong for exchange to its general retail customer base. This confirms that the Dong has consistently been viewed as a specialty or niche currency, never reaching the threshold for inclusion in their standard consumer foreign exchange portfolio, which tends to focus on high-volume trade currencies. There was a key exception noted in the Wells Fargo policy, however, that highlights the difference between institutional and retail services. The bank does allow large institutional clients, which primarily consist of significant corporations that have established legitimate business operations or trade dealings in either Iraq or Vietnam, to process transactions involving these currencies. This is not a service available to the general public, and even for corporate clients, the transaction comes with very specific, stringent limitations. The crucial caveat for these institutional transactions is that they demand a substantial minimum threshold. A corporation would need to be transacting with a minimum of $50 earned in currency, and the transaction would also require explicit, preemptive approval from the bank's specialized international banking team. Therefore, when viewed from the perspective of an everyday individual holding a smaller personal amount of currency, this particular corporate-level option is simply and unequivocally as unavailable and irrelevant to their specific need for retail exchange. Our next point of contact was Chase Bank, which holds the position of the second largest bank in the United States. Their message was arguably the most concise, direct, and final of all the major institutions we contacted. The representative's statement was delivered without any ambiguities. We do not exchange Iraqi Dinar or Vietnamese Dong, and we have no plans whatsoever to initiate this service. This clear-cut response served to underline the industry-wide consensus we were encountering. 2, however, Chase Bank offered an interesting, instructive insight into the core of their decision-making process for foreign currency offerings. They shared that the bank utilizes 3 primary, measurable criteria when determining whether a foreign currency warrants the operational commitment and inherent risk of handling it. These criteria act as internal thresholds that a currency must meet to be considered for inclusion in their exchange services. 2. The 3 essential criteria Chase Bank uses are: first, the quantifiable trading volume of the currency in question within established international markets; second, the demonstrated stability and geopolitical reliability of the currency's issuing government; and finally, the confirmed, measurable level of customer demand for that specific currency among their client base. These are not merely suggestions, but operational benchmarks that guide the entire process of risk and profitability assessment. According to Chase Bank's internal and ongoing analysis, both the Iraqi Dinar and the Vietnamese Dong do not currently meet these fundamental operational thresholds for retail exchange. The decision, as they framed it, is not a personal one directed at any specific individual or national currency. It is purely a calculation based on DAZR's business and risk management. If there is insufficient global trading activity or an inadequate level of government stability and regulatory clarity, the bank will not assume the operational risk. The inquiry then shifted to the role of credit unions, as smaller financial institutions are sometimes viewed as potentially offering more flexible and less restrictive policies than their national bank counterparts. We contacted a pool of these 10 different credit unions, distributed across various states, to gauge their specific approaches to foreign currency exchange, looking for any sign of a different perspective on the dinar and dong. 2. The results from the credit union segment of the investigation proved to be noticeably mixed. As one example, Mountain View Credit Union in Colorado indicated that they occasionally assist their members with the complex task of exchanging various foreign currencies, but they do not execute the exchange directly themselves. They rely on established external third-party currency services to process the physical exchange, a method that inevitably adds a layer of complexity and cost. This reliance on third-party services means that a member attempting an exchange through a credit union like Mountain View could potentially face transaction fees ranging from 8% to 15% of the total value of the currency being exchanged. Such significant fees dramatically cut into the total return and highlight the expense associated with exchanging specialty currencies outside of the standard major currency exchange channels. In contrast, as Navy Federal Credit Unions, one of the nation's largest credit unions, maintains a very precise and restrictive policy regarding foreign exchange. They only facilitate currency exchanges for members who have a clear, demonstrable travel-related purpose for the transaction. Crucially, due to ongoing security and regulatory concerns, both Iraq and Vietnam are currently included on their list of restricted countries. This policy effectively prohibits exchanges for those specific currencies, even if the member is actively planning a trip abroad. 2. With the majority of U.S. banks and credit unions explicitly out of the picture for retail exchanges, the focus of our investigation necessarily shifted to third-party currency exchange companies, which operate either online or maintain physical offices in major metropolitan areas. We contacted a selection of 5 such prominent third-party providers to determine what real-world options might exist for holders of dinar and dong outside the traditional banking infrastructure. Some of these specialized exchange companies, such as Currency Exchange International, do facilitate the exchange of the Vietnamese Dong, but they impose very specific, clear-cut conditions on the transaction. For instance, a customer is typically required to meet a minimum transaction size of several hundred US dollars and often must provide approximately 48 hours of advance notice to process the exchange, indicating that this is not a walk-in immediate service. Furthermore, the exchange rate offered by these third-party companies is not the official market rate. Instead, it is structured to include a substantial profit margin, often as high as 12% above the official interbank rate. In simple, practical terms, this means that if an individual were to exchange a $100 worth of Vietnamese Dong, they could easily lose a 120 or more solely in conversion costs due to the company's margin and fees, underscoring the high cost of this service. When it comes to the Iraqi Dinar, the findings among third-party currency providers were notably more challenging, presenting a much more difficult situation for holders. The vast majority of these specialized companies explicitly stated that they do not handle the dinar at all, citing a combination of factors including a critical lack of operational liquidity, the difficulty of accessing reliable and transparent exchange rates, and the complex logistical issues associated with the currency's low international trading volume. 2. A natural question that arises from these findings is whether a significant change is foreseeable in the future, prompting us to ask representatives across all major institutions about potential future policy adjustments. The response we received on this point was remarkably consistent across the entire financial spectrum. Banks stated that while they constantly monitor the global currency markets, the addition of any new currencies requires the alignment of three very specific and difficult to achieve key factors. 2. These required factors for a future policy change mirror the internal criteria previously mentioned by Chase Bank. There must be a demonstration of consistent, high-volume international trading activity, a verifiable surge in customer demand for the currency within the bank's clientele, and a sustained period of regulatory and governmental stability in the issuing country. Unfortunately, the collective bank assessment is that neither the Iraqi Dinar nor the Vietnamese Dong currently satisfies these essential conditions for inclusion. This is not a matter of the banking industry being fundamentally opposed to these particular currencies. Rather, it is a straightforward issue of business justification. Banks simply do not perceive sufficient business volume, demand, or profitability to warrant the significant operational investment, regulatory compliance, and risk management resources that would be necessary to support a retail exchange service for these specific specialty currencies. 2. To gain additional context on the regulatory landscape, we consulted with professionals in the regulatory sector. While these experts do not have the authority to control the individual policies of private banks, they strongly emphasized a fundamental truth of the foreign exchange market. So currency exchange services are fundamentally demand-driven. Banks typically add new currencies to their exchange portfolios when their customer base demonstrates a regular, consistent, and broad financial need for them, as is the case with the euro, the Japanese yen, or the British pound. Since the overwhelming majority of American citizens do not engage in regular financial transactions, trade, or investment dealings in either Iraq or Vietnam, the necessary level of widespread market demand simply does not exist to prompt major banks to offer exchange services. This lack of broad consumer utility is the primary reason why these currencies currently remain classified as specialty currencies, fundamentally distinct from the mainstream ones that facilitate global commerce and tourism. 2. Beyond the policies and regulations, we sought out real-world accounts to humanize the experience, collecting stories from individuals who have attempted these exchanges. For instance, a gentleman named Mark from Texas shared his account of visiting 7 different banks in Dallas. In a fruitless attempt to exchange Vietnamese Dong he had brought back from an international trip. Every single bank in his area turned him down for the transaction, forcing him to seek out an alternative. Mark eventually located a small, local currency exchange shop that was willing to process his Dong, but the service came at a very steep cost. The shop charged him a substantial 20% fee on the total amount of currency exchanged. This experience highlights the desperate measures and prohibitive costs that individuals must often face when attempting to offload non-mainstream foreign currency outside of established banking channels. Another account, shared by a viewer named Linda from Florida, concerned her inheritance of a quantity of Iraqi dinar from a relative who had served overseas. After calling numerous banks, she was consistently directed away from physical bank branches and toward various online currency dealers. The quotes she subsequently received from these online entities for the same precise amount of dinar were astonishingly varied, ranging wildly from 300 to as high as 800. This massive discrepancy in online quotes, representing a difference of hundreds of dollars for the same amount of currency, dramatically underscores a major systemic problem within this niche market. There is a clear lack of a standardized, regulated exchange rate for these specialty currencies within the broader U.S. retail market. This non-transparency exposes currency holders to potentially unfair and unpredictable pricing, varying drastically from one seller to the next. 2. The overall conclusion for any individual currently holding Iraqi Dinar or Vietnamese Dong is drawn from the collective voice of the U.S. banking industry and is undeniably clear. As major U.S. banks are not currently planning to initiate or offer retail exchange services for these particular currencies. As the only functional options available to you now involve navigating the complex landscape of various third-party dealers and specialized services, which come with the caveat of high fees, inconsistent exchange rates, and a degree of inherent risk due to the lack of industry-wide regulation. Because the market for these particular specialty currencies lacks comprehensive transparency and is not subject to a universally standardized price or rate, the prices offered can and do fluctuate dramatically between different dealers and services. If you are currently holding these currencies with the primary intention of investment, it is absolutely vital to understand that their asli liquidity, which is defined as the ease with which you can quickly sell or exchange them for cash, remains extremely limited in the 2025 marketplace, presenting a significant hurdle to potential investors. From a purely practical standpoint, if you determine that you absolutely must exchange your Vietnamese Dong, your most realistic and viable choice is to locate a reputable, specialized currency exchange business operating within a major city. Before making the trip, it is critical to always call the business ahead of time to confirm with certainty that they specifically handle the Dong, inquire about their current exchange rate, and most importantly, obtain a full and clear disclosure of all their applicable transaction fees up front, avoiding any unexpected costs. 2. For those holding the Iraqi Dinar, the spectrum of available choices is even more constrained and narrow. The majority of transactions for the dinar typically occur through various online currency dealers. In this scenario, extreme caution and due diligence are paramount. You must always verify the dealer's professional reputation, thoroughly read external customer reviews, and ensure that the business is both fully insured and properly licensed to conduct such financial transactions before engaging in any exchange. 2. A critical warning for anyone considering an online transaction: never send currency through the postal service or any other mail carrier without providing proper, comprehensive documentation and securing adequate, full-value insurances for the package. There have been documented and concerning reports of scams, as well as instances of physical loss and theft of uninsured packages, a risk that is significantly heightened when dealing with a specialty currency outside of the secure banking framework. Looking at the broader trends in the financial sector, the movement over the past 5 years has generally been toward U.S. banks reducing, rather than expanding, their foreign currency services. This trend is partially attributable to the massive growth of digital banking platforms, along with the widespread adoption of international payment systems that allow for electronic money transfers, reducing the customer need for physical cash exchanges. 2. The global COVID-19 pandemic also served to dramatically accelerate this reduction trend. With a substantial decrease in international travel and movement, banks experienced a corresponding drop in demand for cash-based foreign currency exchanges. As a result, financial institutions have increasingly focused their resources on major global currencies that generate high volume and profitability, while systematically discontinuing support for smaller, niche currencies that do not meet the necessary volume thresholds. 2. Despite the banking sector's clear operational stance, some individuals continue to hold out hope for a dramatic, so-called UDARS revaluations (RVs), which involves the speculative idea that the Iraqi Dinar or Vietnamese Dong could suddenly and significantly skyrocket in value overnight. However, from the objective, risk-averse perspective of the global banking system, There is absolutely as no verifiable evidence or operational sign that such an event is imminent or even being factored into current financial projections. Two currencies are fundamentally valued based on underlying economic fundamentals, which include a country's prevailing inflation rates, its level of political stability, and the health of its international trade balance. Unless either Iraq or Vietnam undergoes a massive, demonstrable transformation in their financial and governmental structures, it is highly improbable, based on established financial principles, that these currencies will experience a sudden, radical, overnight jump in value. This is not a personal opinion, but a description of the systematic mechanics of the global foreign exchange system. Q2, the situation is somewhat different for currency collectors. Small, manageable amounts of dinar or dong can certainly possess a sentimental or collectible value. Many people find enjoyment in retaining them as conversation pieces, unique souvenirs from their travels, or as a physical connection to their family's history. However, when considered strictly as a tangible financial investment, the current banking reality suggests that the associated high costs, lack of liquidity, and potential risks currently outweigh the speculative potential reward for the average holder. Retaining these specialty currencies as a long-term, speculative financial bet remains entirely a personal choice driven by individual belief, but it is important to understand that this choice is explicitly not a position supported, encouraged, or facilitated by the current U.S. banking infrastructure. The institutions base their operational decisions on verified trading volume and risk, not on speculative potential or online rumors, making the personal investment a self-supported decision outside of the mainstream financial safety net. We also inquired about the specific conditions under which banking policies might change in the foreseeable future. Banks consistently stated that any potential shift would require them to observe a consistent, verifiable increase in trading volume and a sustained surge in legitimate market demand. However, they also cautioned that this type of foundational market shift typically requires a timeline measured in years, not mere months, to be considered a stable, long-term trend worthy of a major policy change. Such a significant shift would also necessitate Iraq and Vietnam demonstrating that they have achieved higher, sustained levels of economic and political stability, along with a greater and more reliable participation in global financial systems. Until these fundamental prerequisites are consistently met, U.S. banks will maintain their focus and resources on the mainstream, established currencies that are essential for the daily operations of international travel, high-volume investment, and global business transactions. 2. Where does this comprehensive, fact-based investigation leave you, the currency holder or potential investor? The single most important takeaway from this entire report is clarity. You now possess the exact, verified truth about the standing of the Iraqi Dinar and Vietnamese Dong within the U.S. banking system in the year 2025. The major U.S. banks are not offering exchange services, and they have confirmed no official plans to start doing so in the near future. Your only real options involve costly, often high-risk third-party services. This is the verifiable truth, not speculation, not online hype, and not false promises, but a set of hard facts derived directly from objective conversations with the most significant financial institutions in the country. Banks determine their operational decisions based on the immutable principles of demand, regulatory compliance, and demonstrated profitability. And currently, the Iraqi Dinar and Vietnamese Dong simply do not meet the rigorous operational standards required to be classified as mainstream, exchangeable currencies in the United States.